Strålterapibolaget Elekta har rapporterat för tredje kvartalet i sitt brutna räkenskapsår där man kommer in i linje med förväntningarna. Det var något starkare bruttomarginal, lite bättre orderingång med en kraftig motvind i valutan vilket gav ett lite svagare rörelseresultat. Och med mig har jag bolagets vd Jakob Just Bomholt och jag byter därmed över till engelska. Good morning.
Okay.
Good morning, Jacob. Could you briefly summarize the key highlights from the quarter, please?
Yeah, hi, good morning. Hi, Kelly. Yes, it's a solid quarter, I would say. Not fantastic, but it's a solid quarter. We come out with organic growth of 2%. As you say, our gross margin is bit up versus same period last year. And then when we adjust for restructuring charge, we actually also see our EBIT margin coming up. But as you highlight, we have a lot of FX headwind, we have a lot of tariff headwind, but somehow we managed to compensate through operational improvements. So all in all, I would say it's a solid quarter.
And you see positive momentum in Europe, and also China has returned to growth. But what has been strategically successful, and can we expect the strength that we've seen now in China to continue?
Yeah, so what we said last quarter, we stand by. We expect double-digit growth in China, both in terms of order intake and in terms of revenue second half. So that's China. Overall, our guidance for this year, we're a little bit cautious in the sense of saying we just guide on organic growth rate, and we say we expect that to be positive. And we still stand by that guidance. And then in terms of next year, we'll have to say you have to wait for our capital market day in June.
And I'm happy that you talked about the order intake. You've also had strong order intake in the US, but still you have negative growth there. But now the Elekta Evo has been cleared by the FDA. And can you give us some flavor on the process of the rollout in the US?
Yeah. So it's exactly right. We got approval on 16th of January, still somewhat delayed from approval in Europe, but it was a good milestone for the company. Then if we look at our order intake specifically for US, then year to date, it's double-digit growth. So that's good. I mean, we have had a lot of customers also the first 3 quarters placing orders in anticipation of our approval, and we are now upgrading the systems to Elekta Evo. But of course, it's good to have a good product now available for commercializing in the US market. You're right, we flagged negative growth in US. It's highly unsatisfactory, but it's a consequence of a depleted backlog. Typically, from us getting an order until we install it and thereby can recognize the revenue, it's between 12 and 18 months.
And what about the cost? Because the R&D costs were lower this quarter, and you've mentioned that you will try to improve the ROI within research. But does that simply mean spending less, or are you more focused, more targeted moving forward?
It becomes a little bit technical, but I think I can explain. So when we look at the R&D cost, we have gross, and then we have a net number. Net number is when you capitalize, put part of the cost on your balance sheet, and then amortize when you remove it from the balance sheet. And so when we say we have lower R&D costs, we look at it from a gross perspective. When we look at net, because we capitalize less, amortize more, it's flattish. Yeah, but over time, we certainly believe that we will invest more than 10% of our income, of our revenue in future innovations. I think that's wonderful news. It's because we believe in the future of Elekta. Otherwise, we would choose otherwise. And it's a pretty high number, actually, for a medtech company to invest 10, 11, 12% of revenue in innovation.
And at the same time, it's your second quarter as a CEO. Last quarter was marked by the major restructuring. How is the implementation looking so far? Is the rollout on track, or has this opened up for even more efficiency gains?
Yeah, it's a little bit mixed emotions, I would say. If I put my business hat on, we are super happy in terms of progress. We are almost done by the end of this week from what we said we wanted to do. So we stand by what we said, that is going to have full run rate effect into next year. From a more emotional point of view, it's been some tough month, and it's probably still is in part of the organization because we have to say goodbye to a lot of very valued, very competent colleagues. But we just had a different organizational setup that couldn't support so many Elekta colleagues. And we're also saying to our colleagues, we really need to have you back in the office. We need to innovate for our customers and patients. We can do that better when we put our creative hat on together in the same room. So it's a lot of change. But I would say when you make the statement we did that Elekta, we are not trading at our full potential, and we are still not, then we have to change. We have to change, and we need to have a clear strategy. We need to be decisive. We need to be bold in our decision making, and then we need to execute, and that's what we are doing. But in terms of the must-win battle one, as we call it, we are happy with progress, and it's going to support us into next year.
And what are you looking forward most the coming quarter?
So Q4 for us is a big quarter. It was a big quarter last year, so in a way it feels like we have a mountain to climb, but we feel pretty good. Of course, we are then monitoring the situation in the Middle East, but there will always be something when you are part of a global company. So we have an exciting quarter. Then we look also forward to Capital Market Day, where we will share our perspective on future years. So we are going to be busy, I would say, up to Swedish midsummer. Let me put it that way.
That's good. Thank you, Jacob. Och tack till dig som tittat även, och Börsfrukost kommer om en liten stund. Hej så länge.